Jamal, what is the primary benefit of whole life insurance to small businesses?
The primary benefit is to bump up the returns that they have on their cash. So if you have cash sitting in a bank earning a return in a GIC or a high interest savings account, if you redeploy those assets into whole life insurance, you're immediately going to potentially double your return.
Jamal, can you give me an example of a client you've helped recently?
There's an architectural design firm in North Vancouver. They do several projects for affluent families, higher net worth families that purchase houses in West Vancouver and North Vancouver. They have about 15 to 20 employees. The owner of the firm is around 60 years old. He's going to be selling his firm in the next 6 to 7 years. And he takes out a large income. He takes about $600,000 of personal income out every year. And he's paying close to $300,000 in tax on that income.
What options did he have prior to meeting you and purchasing whole life insurance?
Not many. He can reduce his personal income, but he enjoys his lifestyle and he doesn't want to make changes. So the only option he really has is to sit with his accountant and determine how to classify his income, whether it's employment income or dividend income.
And you helped him lower his tax burden through the whole life insurance product.
Along with his accountant and I came up with the plan, and we were able to reduce his taxes substantially, around $260,000. So what we did was we took the funds that he was declaring personally, which was $600,000, and he purchased a whole life insurance plan, and he put that $600,000 inside the plan. And then he used the lending facilities that were available to him, and he got a personal line of credit. So now he was able to get $600,000 of capital personally through a line of credit and pay interest on that line of credit. And what we saved him was the difference between the tax rate and the interest on the line of credit. So he saved hundreds of thousands of dollars. He, at first, was concerned that he had a $600,000 line of credit now that was there. And we explained to him the advantage of the whole life insurance was he never had to pay off that $600,000 line of credit ever because he's got a life insurance policy. All that debt is automatically going to get paid off when he passes away.
So Jamal, let's do the math. He was formally declaring an income of $600,000, of which he had owed nearly $300,000 to the CRA. After he purchased the whole life insurance product, his expense was reduced to $36,000 in interest costs and only?
Yeah, correct.
And so if he were to do this for 3 years in a row, he would probably save about $250,000 per year just on the tax savings itself.
You got it.
You're telling me that he's gone from a tax burden of nearly $300,000 to an interest expense burden of about $36,000. What would he do with the other $250,000 or so? Would that go into investments or other vehicles?
He should definitely be investing a large portion of the savings. You don't want the cash just sitting there doing nothing. Part of the reason why you want to invest the money somewhere else is the $36,000 interest expense. He's paying that on an annual basis. So basically he's paying the prime rate on the lending facility. So he needs to earn at least $36,000 in investment income to offset the interest that he would have been paying. So if he takes the tax savings, which is $260,000, he only needs to earn about 3% on that money, even less than 3%, to offset the interest expense.